Great
Yes.
panel and a great session, actually, for the past 2 days. So, we've observed a breakdown in the utility of monetary policy tools, giving rise to the need for unconventional tools and the inability of central banks to influence the global financial cycle. So we've seen low inflation rates, income distribution effects, increasing wealth concentration, and the gains from trade going to a very concentrated group of people, giving rise to Brexit, a decision that this institution missed because it's a non-economic decision. So nobody in the right. I want to know what your thoughts are about the rise of the cryptocurrencies and blockchain and Bitcoin as a tool to disintermediate central banks. Remember, with the cryptocurrencies, you don't have spillover effects.
That sounds like one for the present and former central bankers.
That's okay. Cryptocurrencies, just as they're a bubble. What the service that they provide is supposed to be secrecy. And some technicians have told me that that's not that right, but it's just that's the service. And I think that it's being paid a lot for the service. Second, it's very difficult to think that there will be a currency with such a huge relative price fluctuations. You need price stability. So for me, it's a bubble. For those that have it since a year ago, it has been a great deal, but I don't know. I don't see that much of a big benefit. But I may be wrong completely, but it's difficult.
Okay.
Yeah. Can I follow up on Jose or?
Oh, please.
Yeah. Just one short word. I mean, very very consistent with what Jose just said. I mean, cryptocurrencies are not that much of a monetary policy issue currently because they are very small. They are not a monetary discussion. They are financial instruments with huge risks in terms of investor protection, in terms of money laundering, in terms of potentially financing terrorism, which are all very important issues, but not for central banks to deal with. The reason why we may have to look at it in the future would be either because we see a declining demand for cash, which happens in some countries, but does not happen in other countries, so it's very country-specific, or because we see digital currencies being used in market infrastructures, so say CSDs or CCPs using some kind of a token based on a blockchain and then using a token to settle. And we would have to think about how to inject central bank money into these new kind of financial market infrastructures. So that's something we have to prepare, but it's not for today.
Okay.